Good morning, everyone. This is John Kogan. I'm the CEO of Performative, the online community for corporate finance, accounting, treasury, and related professionals. I would like to welcome everyone to today's webinar entitled Taming Revenue Recognition to Ensure Compliance. The landscape of revenue recognition for many firms has changed. As the FASB and IASB regulations evolve with the revised exposure draft that will be applicable to most businesses, CFOs need to stay ahead of the statutory requirements to ensure that their financials and their ERP systems will adhere to the changing standards. Today we'll learn a bit about how to create best practices based on revenue recognition processes and to get the facts about the latest RevRec regulations and their impacts from your peers. We will also hear practical lessons from a publicly traded company that is focused on creating end-to-end RevRec processes and find out how they implemented the latest EITF 08-1 rules. Now, a few items before we get started. First, a quick welcome to Performative. To those for whom this is your first Performative event, we're the largest and fastest growing online resource for senior level finance, treasury, accounting, and related professionals. We touch an awful lot of folks every month, and most of what goes on is question answering, and we don't do it, our peer community does it. So folks, whether they're CFOs, controllers, financial analysts, you name it, will go online to Performative, search for whatever question they have, whether it's fundraising, valuation, debits and credits, and if they don't find it already in the network, then they can ask, and their peers answer. It's wonderful. It's all completely free, also noise-free. There's no ads at all on the site. There's no selling at all. It's just a great community-based resource, so please check it out at performative.com if you haven't already. Next, a few notes on today's event. A link to today's presentation and a video of this webinar, a link to the video, I should say, will be sent out to all attendees within 24 hours. And the presentation is already posted at performative.com/resources. Of course, it's all free to download. You can grab it now, grab it later, or wait for the email that we'll send out. Next up, there are a number of folks who are here to also receive CPE credits. We will have 3 polling questions today, 3. One will come after the first deck, and the next 2 will come after the second presentation. If you're here for CPE credits, you need to answer all 3 of them. If you have any questions at all about CPE credits, please contact Tanya Walsh, and you can see her email address right there. She typically gets the CPE certificates out within 24 hours after the event. So if you've already registered to pre-register to get the CPE credits, just take the poll and you'll be in good shape. Please ask questions during today's webinar. If you'll take a quick glance at your GoToWebinar control panel, you'll see there's an area there called questions. You can ask questions at any time. Please feel free to do so. Now, we have a Q&A period specifically set aside at the end of today's webinar. So around minute 40 or thereabouts, we will get into the Q&A. But please feel free to ask your questions at any time. And if it's something that needs to be answered immediately, we'll do our best to do that behind the scenes. Otherwise, if it's a question for one of today's speakers, we'll hold it for the Q&A panel. Finally, after today's webinar, once we close it down, you will be prompted to take a short survey. It is literally 60 seconds. It helps us do better the next time, and we always want to do better. And you're taking that short survey will give us a little feedback that will help us always improve. We would greatly appreciate that. Also, if you want to be connected to either of today's 2 speakers, feel free to request that in the survey, and we will help make that connection. Learning objectives, well, we have a fair amount of ground that we're going to be covering this morning, and we're going to be touching items on a number of RevRec areas, and we'll be looking at how other companies are managing RevRec in their realm, and hopefully that will provide some very helpful input to how you can get your arms around the many, many RevRec challenges that exist at most companies. And getting us kicked off on that front today, it's my pleasure to introduce Mike Foreman. Mike is VP and Corporate Controller at Netsuite. Mike joined Netsuite in 2004, and as Corporate Controller is responsible for the accounting and financial reporting across Netsuite's global operations. Prior to joining NetSuite, he served as controller for Bridgewave Communications from 2000 to 2004. Mike also spent 7 years at Arthur Andersen in audit management. And with that, Mike, I'd like to hand it on over.
Great. Thanks, John, and welcome everybody. Let's see here. Here we go. Before we review the revenue recognition processes here at NetSuite, I would like to share some background information about NetSuite with you. NetSuite was founded in 1998, and we went public in 2007. We generated more than $230 million in revenue in 2011 and ended the year with about 1,200 employees worldwide. NetSuite provides a cloud-based financials ERP software suite. In addition to the financials ERP functionality, the company offers a broad suite of applications including accounting, CRM, professional services automation, and e-commerce that enables companies to manage most of their core business operations in a single integrated suite. The company delivers its suite over the internet as a subscription service using the SaaS model, and in addition to serving more than 12,000 organizations, we utilize the service ourselves to run the business. Before we move on to the specific revenue recognition processes in NetSuite, I wanted to give you a brief background on our sales order and revenue environment. In a typical month, we process more than 1,500 sales orders through the NetSuite service, so we have a fair amount of volume and complexity to our business. These orders are comprised of 3 classes in terms of new customer sales, upsells to existing customers, and then finally renewals. A new customer order will generally start from a lead in the system, which then gets converted to an estimate and onto a sales order, which will then invoice the customer and generate a revenue recognition schedule. These orders are stated in a variety of currencies, contain a significant number of item configurations, as we maintain more than 300 items in our price list. We basically sell 3 different types of products, the first being subscription, which includes the main suite, users, and a number of different add-on modules depending on the needs of the customer. Support items comprise the second group, and those include annual contracts to support the customer's subscription services. And finally, we sell professional service items, which cover customization of the subscription service, as well as training classes. In regards to our RevRec policy, we adopted the guidance under 0801 in 2010. And since we're not able to establish VSOE or TPE, third-party evidence, we utilize estimated selling prices for all of our items in order to properly allocate our revenue among the items that we sell. We amortize our subscription revenue over the term of the contract while recognizing our professional services on a percentage of completion basis. Prior to the adoption of 0801, we were only able to present one revenue line in our quarterly and annual filings due to the fact that we hadn't achieved separability among our various items. But with the adoption of 0801, we now report 2 separate revenue lines, one for subscription and support and another one mainly for professional services. Now we've talked a bit about the background of NetSuite and our revenue recognition environment. I wanted to discuss how we actually use the NetSuite service to recognize revenue for reporting purposes. So it all begins with the sales order. Our sales team actually kicks off the sales order process by converting estimates already populated in the CRM portion of the system into sales orders. These sales orders are then approved by sales management and then routed to the finance team for review and processing, assuming all the requirements have been met to actually process the order. Processing includes running the orders through our EITF 0801 bundle in terms of determining if we have contingent delivery requirements, and then ultimately allocating revenue if we have multiple elements that require such allocation. Some orders may be simple subscription items which won't require allocation. An estimated selling price is also populated for each item on the order, and the final allocation is shown on the order as well. Once the allocation decision is complete, our finance team then creates the revenue recognition commitments or schedules that come directly from either the sales orders or the bill and invoices. Commitments cover the entire term of the sales order, while schedules will only cover the period billed by the particular invoice. But both commitments and schedules are stored in our system and posted to our general ledger through automated journal entries. We close revenue on a monthly basis, which allows us to provide a deep analysis on revenue trends, as well as gaining comfort that our revenue is reported accurately. Various searches and reports on our revenue permits us to evaluate if we need to reassess our estimated selling prices during the year. In addition to compliance requirements, these searches and reports allow us to forecast our revenue on a customer-by-customer basis, which is done at least monthly, if not more often. And we'll touch upon some of the forecasting details later in the slide deck. We're able to perform all of the above inside our integrated platform, negating the need to use multiple systems. Let's now touch upon some of the benefits of the system. The first benefit is that we're able to trace each transaction from the sales order all the way through the posting of the related revenue in the general ledger. This allows us to more easily identify the root sources of questionable trends and other RevRec anomalies. We can also look at the individual customer record to view all their respective sales transactions and resulting RevRec journal entries. And because our system combines both the CRM and ERP functionalities, we don't have to spend time and resources reconciling separate systems, whether it be from sales transactions to the revenue recognition schedules or from the revenue recognition module to the general ledger, as the process is fairly automated and executed inside the same system. And finally, the system is real-time in the sense that you have visibility to sales orders as they're processed, and the resulting RevRec recognition as the journals are posted. So this permits us to conduct research, reporting, and forecasting utilizing a fairly small team. Now that we've discussed some of the benefits of the integrated process, I wanted to take a step back and review some of the best practices that we've established at Netsuite to process our orders. First of all, we have grown an offshore team comprised of fairly high-quality CPAs to process all of our orders as they're approved by sales. Initially, when we were a smaller company, we had contracted with an offshore third party, utilizing some very similar resources before we converted those same resources into full-time employees as we became, as our volume ramped up and we became a much bigger company. Due to the fact that all of our employees, regardless of function, only require internet access to use the system, our team is based in a very cost-efficient location, different than our sales teams that are dispersed throughout the world. The billing team is responsible for end-to-end processing of orders, from executing the allocation under 0801 to creating revenue recognition schedules, billing our customers, and provisioning the actual software service to our customers. Secondly, all members of the team use the same standard desktop procedures that we have continued to refine as our business has grown and has become more complex. These procedures allow us to train any new employees in a more efficient manner and ensures consistency across the team. And finally, we've developed a standard QA checklist that we use throughout the month, basically on a transaction-by-transaction basis, as well as month-end to check each order for accuracy from both a revenue recognition perspective as well as billing and provisioning, ensuring that we've obviously provided the required service to the customer. Since the QA checklist is stored in each respective sales order in the system, we're able to actually run searches and reports to generate metrics on things like error rates, as well as file cases to make any necessary corrections. So from the high-level, the high-quality, low-cost offshore team to the standard desktop procedures and QA checklists, we feel that we've got a great level of assurance that our revenue reporting is being delivered in a timely and accurate manner. So here's an example of the sales order QA checklist that we just touched upon on the prior slide. So as you can see, we conducted a significant number of checks between the sales order and the corresponding support documentation to make sure that our orders are being processed in an accurate manner, which hopefully then leads to accurate revenue amounts that can be relied upon. So items such as sales order amounts, dates, signatures, taxes, discount levels, and specific products the customer have ordered are included in the checklist. So in this example, all the checks have passed the review. So we can use the results of these QA reviews to identify areas in which either our sales or finance processing teams require additional training, as we're able to perform searches and reports on this data since it's all captured in the system. So this functionality promotes an additional level of assurance around the sales order process. As I previously highlighted, one of the main benefits of our integrated system is that it supports a distributed sales force and the functions required to process the related transactions. So as long as each user has simple internet access, whether it be from home or office, they can be part of any activity in terms of either selling the service, processing the order, or analyzing and resolving data. All of our users share the same database, have the same view into the same centralized data, and our company is taking full advantage of these capabilities by growing a fairly decentralized sales team throughout the world, but at the same time locating our order processing and financial analyst teams in completely different locations. And I want to delve into a bit more detail about our experiences in adopting 0801. So as I mentioned before, our subscription and professional service elements are now separately disclosed on the face of our income statement, as they are now considered separate elements. And our professional services are recognized on a separate schedule from our subscription services, since they represent a distinct element. And as we discussed before, that revenue is being recognized on a percentage of completion basis. As with our revenue elements, the respective costs of the sales for subscription and professional services are reported separately on the face of the income statement. This additional information provides an additional layer of insight from both an internal and external perspective as it relates to the respective margin of our service lines. And then in the year of adoption, which was in 2010, we were actually required to present our revenue numbers based on both 0801 and 021, which is the guidance that we followed prior to 0801, in order to provide comparability to prior years, as well as show the impact of our adoption. So during the implementation of 0801 and the ongoing support of the new guidance, we've been able to pull a large amount of sales order data from the system to form the basis of our estimated selling prices. This data includes sales by item, discount trends, and average selling price. And because the data comes from a single system, we've been able to slice the data by various categories, including currency, location, deal size, customer size, in order to determine if we had to stratify our estimated selling prices. The fact that our system automatically allocates the revenue among the various elements allows us to efficiently and accurately report our revenue with a fairly small team. You can imagine how much time it would take to process revenue on spreadsheets when you're dealing with more than 1,500 orders a month. And then by using a sandbox environment, we were able to apply the 0801 requirements to new orders while we continue to report revenue from the same sale orders under the prior method of 0021. And now that we've adopted 0801, we're utilizing search and report functionality to monitor changes in sales prices so that we can determine if and when we need to update our estimated selling prices. For the most part, we're updating ESPs on an annual basis, but obviously if we see some significant trends in how we're selling the products and prices in different countries, we may make changes throughout the year. Now here's an example of a search that we might look at on an ongoing basis, which allows us to see down into the line item level. So we can see transaction dates, class of the transaction, currency, quantities. These data points allow us to conduct some further analysis to determine if we need to make any adjustments to our ESPs throughout the year. And as with establishing the original ESPs, these searches allow us to identify changes in sales behavior, such as increasing or decreasing discount rates, price fluctuations in certain geographies, currencies, or company sizes. So once again, we could easily pull large amounts of data or even create safe search alerts to monitor specific sales activity that might lead to an adjustment to our existing ESPs throughout the year. And then this is just a further detail insight on the line item level. I'd like to now talk about some of the controls that we've developed to aid us in our month-end review of revenue recognition. First off, we've leveraged the system to automatically flag and defer revenue associated with sales orders that exceed a certain dollar threshold. We highlight these orders for further review by a more technical revenue accountant, given that the larger contracts have a greater likelihood of containing provisions that may not allow us to recognize revenue at the commencement of the contract. Second, we hold 2 formal meetings each month to review the results of these large contract reviews to ensure the revenue management team understands particular issues that have been raised and to conclude on the proper treatment of those contracts. We've created a simple save search to ensure that the entire population of these sales orders has been identified and properly reviewed. And DRR, which you see on the slide here, stands for Delayed Revenue Recognition, and that's a custom field that we've created and placed on each sales order to identify and search on these particular orders that we're reviewing in a little more detail. So once we've concluded that on the appropriate revenue treatment, we either remove the sales order from this DRR status, or we'll maintain the status and add an explanation about why we think it needs to remain on a delayed revenue recognition status in the sales order, so that it actually appears in our search. So that when we run the search after the meetings have been run, we can say, okay, here are all the remaining orders that we have kept on delayed revenue recognition and what the reasons are for that. Once we're comfortable that the sales order doesn't need to continue to be on delayed revenue recognition, we'll just uncheck the box on the sales order, and then we'll let the normal RevRec process continue. Finally, after we've closed month end, we'll hold a monthly metrics meeting to review some of the statistics of the sales order process in terms of the numbers of orders processed, the class types, and the number and types of errors we've identified in the QA process that we looked at previously. And of course, we'll have already utilized case management functionality in the system to alert team members of errors identified so that they can go and address and fix those in a timely manner. Then those same issues are tracked for resolution and ultimately reported in this metrics meeting. So first of all, we identify the errors, they're then fixed, then the cases are updated, and then we get comfortable that everything's been resolved before we close out the month. If we discover a trend of errors in one particular category, because we do classify each of the errors, we'll conduct additional training with the team, whether it's a finance-related issue or a sales issue, and have training on that particular issue with the team members. The last topic that I wanted to talk about is the forecasting of revenue. Since we maintain revenue schedules for every order for every customer in the system, we're able to generate forecasting reports down to the customer level for all future periods in which those orders cover. Once we have the revenue forecast for existing orders, we can then make some assumptions about future new business, upsells, and then renewals for existing customers. Given the simplicity of accessing the data, we conduct this detailed forecast at least monthly and sometimes more frequently. And as we book new orders or process credits, we're able to quickly refresh the forecast and provide updates to senior management on how the forecast looks. And then this ability to drill down on the customer level on each order has allowed us to achieve fairly low variances between our actuals and our forecasts from a revenue perspective. This is an example of one of the revenue forecast reports that I just discussed. So as you can see, we're able to view a level of forecasted revenue by customer, by transaction, and then for all of the periods in the future that those transactions cover. So by running these rather simple revenue reports, we're able to put together updated forecasts in a very short amount of time with minimal resources, which provides senior management a great amount of visibility into our forecasted revenue. And to wrap it up, I'd like to summarize what's worked at Netsuite in terms of our sales order and revenue recognition processes. First of all, we feel that we have a very tight integration between our sales and finance organizations, both in terms of the amount of communications between the two teams, and that way we've leveraged the system between the CRM and ERP functionalities. We've also been able to develop and continuously update a variety of control mechanisms in and outside of the system to ensure timely and accurate revenue reporting. Automation within the system has allowed our finance team to focus on more value-added tasks in the process rather than spending a lot of time on reconciliations. And the fact that we use a cloud-based ERP system supports our distributed sales and offshore finance teams throughout the world. And finally, we're able to take advantage of the ongoing automated upgrades that are made to the system throughout the year, rather than spending an inordinate amount of time on resources manually upgrading systems on an annual basis, which you would typically do with an on-premise solution. And with that, I'd like to thank everybody for your time, and I'll now turn it back to John.
Great. Thank you very much, Mike. Appreciate that. All right, folks. So we are going to go ahead and take this opportunity to post our first polling question. As a reminder, if you're here for CPE credits, you need to take this. But even if you're not here for CPE credits, why don't you go ahead and take it? It's statistical in nature. It's incredibly easy to answer. And we will revisit the results when we get into the Q&A process. Speaking of the Q&A process, if you have any questions as we're going, please feel free to ask them. We've got a few queued up already, so keep them coming, and we will do our best to get to them at the end of today's event when we go into the questions. So I'll leave this open for another 10 seconds or so, and then we'll go ahead and move on to the next speaker. All right, looks like most of the answers are in here. So we'll go ahead and close this down. Thanks, everyone, for participating. And let's hop to our next speaker today. It's my pleasure to introduce Tim Sullivan, who's the CFO of Trustee. Tim brings to Trustee over 15 years of financial and strategic management expertise with technology companies. Prior to joining Trustee, Tim was a managing director in Morgan Stanley's technology group. At Morgan Stanley, Tim worked with a full spectrum of technology companies, computer hardware, software, internet, semiconductor, and contract manufacturing, amongst others, and spent several years as the co-head of Morgan Stanley's global semiconductor practice. Tim helped his clients raise over $12 billion in equity and debt financings and advised on over $20 billion in M&A. His clients included Intel, NVIDIA, Xilinx, Applied Materials, Agilent, Sanmina, and Rambus. Tim, pleasure to have you with us here today. Thank you so much for joining, and please do take it away.
Thanks a lot, John, and thank you, Mike. So just to get started, I wanted to give everyone a little bit of background about Trustee. We're an online privacy solutions and advertising compliance solutions company. We help businesses of all sizes build trust and engagement with their customers. You may be familiar with our seal, which you see on the left side of the slide here. You'll see that on thousands of websites, including think every page of AT&T and Best Buy, just to cite a couple of examples. We're about a $20 million company. In terms of revenue rec, we don't currently have multi-element transactions, so that part of things are relatively straightforward. Most of our revenue is realized over time in something like a SaaS model, where we've got varying durations of contracts with our customers, 12, 24, even some at 36 months. All that being said, deferred revenue treatment is critical to the business. It is something that, as I'll explain later, has historically been more difficult to track, but with the implementation of NetSuite, it has certainly made my life as CFO a lot easier. So I wanted to give you a little bit of background about where we came from, because it'll help you understand where we are now. When I arrived, our internal systems, both, or I guess all of operational systems, CRM systems, and financial systems were more or less disconnected. And getting any sort of management data or reporting data out of them was extremely difficult. What I'm showing here is information from the marketing automation system came into Salesforce, which was connected to our own in-house provisioning and operational and hosting system that we refer to as LAD. However, all the financial data was completely disconnected, so it was a very manual process of getting order information over into Excel or QuickBooks, as the case was. And from there, trying to come up with revenue rec was a very, very difficult exercise, in that we had roughly 4,000 orders at that time. This is 2010, 4,000 orders a year, which isn't quite as much as my friends at NetSuite, but as you can imagine, it's still difficult to track that level in Excel. So the process we have today, following our implementation in NetSuite, where we went front to back, CRM, financials, and we even built a replacement system for our internal provisioning within NetSuite. So everybody has a unified view of the customer, a unified view of all the data available. Makes it very helpful and easy. So today, once a customer places an order, the order's QA'd. We make sure it's documented properly, that all the contact information and all the other information we need is collected. Once that order is approved and booked, we make sure that the appropriate revenue recognition template is applied. And when I say revenue recognition template, what NetSuite allows us to do is create these templates, predefined rules, which can apply to any number of items or SKUs. So you can define up front that when I sell, item 1, 2, 3, that the revenue associated with that item should be recognized over, say, the life of that contract, which is a relatively simple example. But it eliminates the possibility or limits the possibility of user error associated with that, provided that the right template is assigned to the item, which can be done when you define what that item is. So as I said, for the most part, we recognize revenue on a monthly basis over the life of the contract. There is a small portion of our business that's functions like professional services, and we recognize this on a % complete basis, just like NetSuite does. Once we get to the monthly close, I can tell you that it is a snap, very automated, very easy, especially compared to what I used to have to do doing that in Excel. The other thing I'll say, as compared to the manual process, is that when you're trying to do revenue rec in Excel, you lose, unless you're going to capture an immense amount of data and make the task even more complicated. It was difficult to get valuable reporting information out. You could obviously calculate the revenue rec as needed, but just because you're limited by the data you put into Excel, it's more difficult to get valuable management information out. Whereas in NetSuite, just by the nature of our implementation and the way the system works, we have everything associated with that transaction in the system already, and therefore it's easily accessible and reportable. So in terms of signs to consider a different approach, as you begin to scale your business, it's harder and harder to keep up using spreadsheets. I am a perfect example of that. I think at this point, so we have data in NetSuite now going back to the beginning of 2011, and I looked yesterday, roughly 11,000 different revenue recognition schedules. So you can imagine the difficulty in keeping that level of data live in a spreadsheet. It's doable, but I can tell you it is difficult. The growth and complexity of your business. So when we were implementing NetSuite, my business was a lot less complicated than it is today, in the sense that we really did and offered just a couple products. Since that time, we've introduced 10 to 12 new products, including a completely new model of product, which is on the advertising solution side, which is really a usage-based product. And again, having the ability to automate revenue rec for that, as well as our other products, is very helpful. And as I mentioned before, the business intelligence that you lose by doing revenue rec offline, if you will, can be significant. So I wanted to mention some best practices from our perspective. And again, this is Trustee is a private $20 million company. It's a little different than a public multi-$100 million company. So take that for what it's worth. You don't know what you don't know. Going into the implementation, it's a little difficult to know where the gotchas are and to know necessarily what questions to ask. But with the implementation behind us now, I can suggest a few things, which is one, really dig into the way your transactions work, the way your contractual arrangements with your customers work, and to the extent possible, convey that information to whoever is implementing the system, making sure they understand it. I think you'll wind up with a better implementation result and probably more streamlined results once things go live. In doing so, you'd want to try to focus on the more complicated pieces of the business. As I said, our business at the time we implemented was relatively straightforward with just a couple products. Had I been able to foresee the new products that we would be introducing over the coming couple years, I don't know that I would have done anything different, but it certainly would have informed my view as to what we needed the system to do at the time. And then obviously, as you get deep into the contractual arrangements and types of transactions, you'll be able to incorporate those scenarios into revenue rec templates, which again simplifies revenue rec down the line. Best practice number 2, invest in resources that can help. I'm a big believer in systems. They can be expensive, certainly, but when you compare that to the cost of doing it manually, the manpower associated with doing that, and trying to place a value on the information you can get out and the time savings that you get from better systems. I think for the most part, there's a big payoff there. Excuse me. Training would be the second point. Having a system in place is great, but the people have to know how to use it, not just at a basic level, but I'd say at as advanced a level as possible. And so continuing training is important. In our case, that training would focus on reporting different ways to report, different ways to get data out of the system is pretty key. And finally, processes and controls. Mike spent a lot of time talking about the controls that they have in place. Less of an issue for small private VC-backed company, but obviously we still need to be reporting and giving valuable information to our investors and stockholders. For the most part, those processes and controls are resident in my office. And since I have a limited staff of 4 people here, it's important that those processes and controls be as streamlined, straightforward, and simple to use as possible. And certainly that's the case with the way we've implemented NetSuite. Number 3, so I kind of touched on this earlier, you really need to look at what's going to be happening down the line with your company to the extent possible. So what new products might you be introducing, what new sales channels are you going to go after, what new geographies might you be targeting, and thinking ahead to how that might affect financial reporting and or revenue recognition. In terms of foreign currency issues, which we are dealing with now by virtue of pushing our expansion into Europe, where we're now doing pound-denominated billing and probably euro short to follow here. And as I mentioned, new product lines that might have different revenue recognition issues associated with them. Certainly something to keep in mind if you are designing or on the verge of implementing a new system. So that about wraps it up for me. Thank you very much for your attention, and I'll turn it back to John.
Great. Thanks, Tim. That was a wonderful counterpoint to what Mike said earlier. It's great to get the private company versus public company perspective and the company size differences. We are going to get to Q&A very shortly, but at this point we do want to get to the next 2 polling questions. So remember, for CPE credit, there are 3 polling questions in total. We did 1 earlier, so we've got these 2 now. And once again, even if you're not here for CPE credit, we'd love to see where you stand on these next 2 polling questions, and then we'll revisit the answers when we're done taking these polls. We are collecting questions as we go for Q&A. If you have any questions, now will be a great time to get them in. And then when we're done with these 2 polls, we'll go ahead and get working away on the questions from the audience today. And to get us there, I'm going to go ahead and close this first poll, and we'll move on, I'm sorry, the second poll here. We'll move on to our 3rd and final poll question. And that's just launching right now. There we go. Okay, so while everyone's taking this, I'll remind folks that there will be a brief survey at the end of today's webinar. So the moment you step off the webinar, the moment we close it down, you'll be presented with a survey. It takes about 60 seconds. We would greatly appreciate your giving us that minute to give us your feedback. What worked, what didn't work, what we could do better next time, etc. We'd love to hear all of that so that we can do better next time. We would greatly appreciate your taking that minute and giving us your feedback. We also make it very easy to connect with today's speakers during that survey. It's just a click of a mouse away, and we'll be more than happy to help you connect with either of today's speakers or if you have questions for the sponsor, Netsuite. All right, I'm going to go ahead and close down this final poll, and as promised, first thing we'll do is let's take a look at the polling results. We'll start with the first question that we took earlier on. Most difficult thing about revenue recognition for my company is making sure we apply all the regulations properly. Mike, I'm going to ask you a question related to this. That to me sounds a lot like making sure the technical accounting is happening properly and that the company thoroughly understands what the regulations are so they can be applied properly. What do you guys do at Netsuite to make sure that you're up on the latest and that the latest is actually what you're implementing?
So we have not a large technical team, but a core revenue team that is focused on the topic at hand. So we are all subscribed to various services, technical services, that provide updates literally on a daily basis about changes in pronouncements, not just RevRec, but a variety of technical areas. Mm-hmm. We're also attending various seminars throughout the year as the new pronouncements come on. I mean, the latest overhaul of RevRec has been in process for, it seems like 5 years now, mm-hmm. And we're attending those, it must be every 3 or 4 months, getting updates on where we're at with that because we're looking to plan ahead to get ahead of the ball on those areas as well. Yeah. So we do a lot of monitoring of what's going on out there and attending seminars to keep up to date.
Gotcha. And Tim, obviously smaller company, you've got a smaller team. That makes the task that much more difficult. What do you guys do to stay on top of things?
That would be me and my auditors keeping in close touch to make sure we're in compliance.
Gotcha. So close touch with the auditors, and one would presume they're all over that. But okay, great. I'm going to go ahead and pop out next polling question results. So this question was, my biggest concern around RevRec is managing 08-1, 09-3, 97-2, IFRS and convergence issues. Interesting that, and Mike, you mentioned this, there's so much going on, and I think there's just this huge cloud of question around what's going to happen and when. That, interestingly, that's way out in front. Any surprises there, Mike?
I think actually, if you've already adopted 08-01, there's a lot of similarities between the two, mm-hmm. which should make the transition a bit easier. But I think the biggest surprise, or I don't know if it's a surprise, but the biggest amount of effort that's going to be involved in the student pronouncement is the fact that they're looking at making you go back 3 years and restate your revenue numbers as a public company. So while they're not going to make the new pronouncement effective, I think, until maybe 2015 or 16. If you go back 3 years, you have to start thinking about, starting to track your revenue in 2 different ways, probably beginning in 2013. So there's not a lot of time to kind of digest the new pronouncement, figure out how it's going to affect your business, and to start reporting on it. We'll most likely do the same thing we did with 08-01, is we'll set up a sandbox and start tracking them separately on a real-time basis so that when we get to the effective date, we should be ready to go.
Mm-hmm. And something tells me your software will probably evolve to help out with that?
Certainly. We've already started talking with some of the firms about their spin on the new pronouncement and making sure that we're not missing anything, and then putting that into our roadmap to ensure that our current 08-01 bundle gets updated and adjusted so that it captures what we'll have to do to be in compliance with the new guidance.
Gotcha. All right, and then let's take a quick peek at the last polling question. And this question was, my company uses the following to manage our revenue recognition. Excel in first, I think a surprise to absolutely no one. And then built into ERP system, and then third-party software for tracking RevRec. And Tim, you came from that top group. Were you guys managing all of this in Excel before you switched over?
Yeah, we were. I'd built a model that tracked orders, revenue rec, and some basic reporting stuff, and that was basically what I used to feed into QuickBooks. Certainly less than optimal way to do it, but at the time it was the best thing we could come up with.
Right.
Yeah, but it's as I say, it's doable, but I would say it's more prone to error. If you inadvertently change a cell, it obviously throws everything off. And the one nice feature that we have today now is, to the extent there are any changes in circumstances for a particular transaction or for a particular item that a customer's purchased, you can actually go in and modify the individual revenue recognition schedule to reflect that. And also it then has an audit trail associated with it that you don't have when you're using something like Excel. So that
right.
At least it's the change is made, but you know what you did when you did it and why it was done.
And who to yell at, especially if it's yourself.
Exactly.
All right, love that. Okay, let's go ahead and hop into the questions, and thanks, folks, for tossing your questions in. Feel free to keep them coming if you want. First one up, this certainly to Mike. Mike, you might know this. You might know it's a NetSuite question, actually. Is the QA checklist that you showed in one of your screens, is that something that's built into the RevRec module on NetSuite, or is that a custom bit?
No, it's not standard, but it was a fairly easy customization. It's just basically a custom record that's added to the form, so it wasn't anything that was too complex to set up.
Gotcha. Next question also to Mike. How do you guys determine percentage completion for your professional services revenue, and how's that managed within the system?
So we also use our PSA functionality, which tracks jobs.
PSA being Professional Services Automation?
Correct. And so our professional services organization, as they are performing the work on a particular job, which is already linked to the sales order, as they record the hours at the end of the month, when we are recording our revenue for the month, the feature automatically calculates the percentage completion on the job record. And then when you run RevRec, the line item will then refer back to the job, pull that percentage completion, and then multiply it against the revenue that's been allocated to that line, and then that'll be the amount of revenue recorded for the month. And it's all a cumulative calculation. So if you've already recognized 10% of it, and you're now at 30%, it'll recognize 20% of it. Obviously, if you change your estimates throughout the month, and you end up saying, oh, well, I blew the budget here, I've got another 300 hours to work on it, it'll actually take revenue away if the percentages go that way.
Gotcha. And how do you guys manage the human element? So, you're counting on your implementers who are doing the work of clients to actually update the system on a regular basis. Do you guys have a thorough process and checklists around that?
In terms of the job tracking?
Yes.
Yeah. So we also have a control at the end of the month where we look at variances and changes in original time estimates with revised estimates, and we'll make we'll go back to the project managers to understand why those fluctuations occurred, making sure they're accurate, and we also perform a reminder at the end of every month to ensure everybody's recorded their time. And we have certain incentives for our team based on how much work they do, so there really is a good incentive for them to make sure the time's recorded and updated in a timely manner as well.
Gotcha. No update, no pay. That's always
That's correct.
Yeah. Tim, when did you realize that it was time for you to go automated? What was the triggering, if there was a single trigger, or what were the triggers?
Well, I think it was probably in the kind of beginning of the second quarter through the third quarter of 2010. Just looking ahead to the growth that we were experiencing and that we were seeing that would continue in the next couple of years, it would have been extremely difficult inexpensive in terms of manpower to keep up with that in a manual way. And I think in order to get some efficiencies across not just the finance organization, but sales and operations as well, getting integrated on a single platform made a lot of sense. And so I pushed for that.
So it wasn't just about RevRec, but that happened to be one of the elements that you were considering in the whole view of that, say, schematic that you showed during your presentation. That was one of the many elements.
Yeah, I mean, it was part of the cost-benefit equation. Is, you know, this is how much time we're spending on this activity right now, and it would be, I can't say eliminated, but reduced
right.
Greatly by moving to a integrated solution.
Yep. Tim, can you share any recommendations on how to work effectively with external auditors on RevRec? Sounds like you lean on them significantly to help keep you guys up to speed.
You know, for us, it's just simply a review of products and key contracts, and I think we've, as I mentioned, we do not have the multi-attribute accounting at this point, multi-element transactions. So we've been able to keep things simplified in that sense. But as the business continues to grow, you know, it's just something we revisit regularly with them.
Right. And Mike, what about you? I'm sure you guys are in constant touch with your audit team as well. How do you ensure that they're getting you what you need?
Yeah, so for the most part, we try to maintain plain vanilla contracts, which really limits the amount of complexity in the deals. But obviously, as we sell to larger, more complex companies, we'll get into some complexities there. And so what we always do before we go into a quarterly review is we'll actually sit down with the auditors and identify here are the 4 or 5 deals that have some technical challenges to them.
We call that hair.
Yeah. So while we believe this is the right answer, we'll make sure that we bounce it off to them to make sure that they have the same opinion, so that even before they come out and do the actual review, we're both on the same page. We've recognized what we believe is the appropriate amount of revenue for the contracts, and then that going forward, there's no disagreement between the two parties.
Gotcha. Great. Okay, folks. Well, there were a couple of questions that we are not going to have time to get to today, I'm afraid, but I will work with today's speakers to get those hit offline. My apologies, but I do want to make sure that we get everyone out of here on time. So at this point, let's do a couple pieces of final housekeeping. Number one, I'd love to thank Mike and Tim for your time and insight today. That was great, guys. It's always great to see how finance and accounting leaders are dealing with these issues in the real world, and you gave us a really nice 1-2 punch. So thanks for giving us your time today, folks. Number two, thanks, of course, to Netsuite, who sponsored this event. Like everything we do on Performative, it's all free for our users all the time, and also very high quality with great speakers, and it's due to the support of folks like Netsuite that we are able to do that. So a great thanks to Netsuite. Next up, a final reminder, you've got a short survey coming your way when we shut down today's webinar, and that'll be in 1 minute. If you have any questions at all about CPE credit, please contact Tanya Walsh. You can see her email at the bottom of this screen. So any questions at all, please address them to Tanya, and she will get them answered for you quickly. And a link to soft copy and the video of today's webinar will be heading your way within 24 hours. And with that, finally, of course, we'd like to thank everyone who joined us today. We appreciate how busy you all are. Obviously, this is an incredibly important topic for every company, and we're glad that you joined us today. I'm sure you guys found it as worthwhile as I did. We hope to see you again at performative.com or on another Performative event in the future. Thank you so much, and with that, we will go ahead and close down the webinar and bid everyone a wonderful rest of your week. Take care, all.